Okay, good morning guys. I hope you're all well. Final session of the week. So we're going to be talking about, well, I guess reviewing yesterday in terms of Bank of England, in terms of US inflation. We're going to be having a look at some of the market moves we've seen overnight. Headlines this morning focusing in and around Brexit. And we'll have a look at the day ahead. So that's the schedule here for a short, sharp briefing to wrap off the week. So if we have a look at the charts, well, where should we start? I guess equities. I mean, you know, positive few days. Actually, it's turned into quite a nice week. If we have a look at the daily chart for the S&P, then it's actually been a great run, coming from the back end of last week and technically driven perhaps as much as anything else. You can see the red box here drawn on Monday where we touched and tested this trend line that's been in play for the last few months. And a nice breakthrough that on Wednesday, and we've extended that yesterday, and now where we're trading right now up onto that top from April, the mid-April high. So technically quite neat here. We'll talk about inflation data shortly, but perhaps that was a catalyst yesterday with slightly lower than expected inflation data, just maybe helping lift equities a little bit. But you know, in the grand scheme of things, you know, equities are still trading quite significantly off those levels that we saw back, the all-time high set back end of January. So, but definitely a positive week for certainly developed market equities. I mentioned that emerging markets have been under pressure this week. I mentioned this earlier in the week in the briefing on Tuesday, talking about the dollar strength, also talking about US yields rising and how this is causing a little bit of problems for emerging market financial assets. So emerging market currencies, emerging market debt under pressure as the dollar and US yields have been rising. So a tough week for emerging markets, but actually for the S&P nice and solid, back up to test. And in fact, officially yesterday we set the highest price we've seen for 2 months. So stocks consolidating those gains. If we just zoom in a little bit on a 60-minute chart, we've just been flat overnight, very quiet, quite subdued. This line I've got on the 60-minute chart is that high from mid-April, and currently we're kind of chopping around that area, nice and steady, just kind of waiting for further guidance. I guess before we go around, well, let's look at oil, and then we'll have a look at the headlines and check out what's been going on driving things overnight. So this is the chart of oil. I'm going to start on the longer term. So the last, sorry, let me get rid of some of these. Someone's been going overboard on the ellipses here. Also get rid of that Fibonacci, and let's start again. Zoom back a little bit. So, you know, of course, very solid week, very choppy on that 8th of May day when Trump finally announced the US are withdrawing from the Iranian deal. Downside before the announcement, then of course since then we've been upside. Yesterday another new 4-year high, so 71.89 for WTI crude, and overnight it's been quite quiet. We haven't had too much development. I mean, people are currently kind of trying to decide if Iranian supply now goes offline due to sanctions being reintroduced. Well then, can other producers take up the slack and increase production to offset that shortfall from Iran? And you've had plenty of people saying, yep, we'll do that. So Saudi, for example, but also Kuwait and Iraq potentially have a little bit of spare capacity. But I think what people are worried about is the speed at which new or increased production can come online from any of these producers. The thought at the moment is that actually it might well be Kuwait that is the fastest to market with regards to increasing production. But the point stands that you can't just, you know, turn the tap and suddenly you're producing another 500,000 barrels a day just like that. It's definitely not as simple as that. The logistics behind production and transportation and all the rest of it mean that you can't just dial it up and down at will. So, you know, if Iranian crude does come offline, then It'll be interesting, and that's the uncertainty. How quickly will new supply from other countries come online to replace it? And there's a fear that it might take a few months. So, this is something that's been obviously elevating prices since the decision was made by Donald back on Tuesday. We'll see where we go, of course. But for now, I mean, we talked about oil a lot this week, and actually there's not too much new to mention. So, we've been drifting and consolidating, but definitely hanging on to these gains, trading right up at 4-year highs here. Right, let's have a look at the headlines. And actually, we've had some, well, I don't know, here in the UK at least, certainly seems to be Brexit-related stuff grabbing the headlines this morning. Deadlock. Theresa May postpones key Brexit votes. So it does look like, and again, I talked about this earlier in the week, about this real divide within the cabinet as to how to move forwards with regards to the customs union. Do we stay in it somehow? Do we come out of it? A hard Brexit, soft Brexit? A real split, a real divide. Theresa May wants to effectively stay in the customs union, but she got voted down at the cabinet meeting a couple of weeks back. 6 votes against her plan, 5 votes for it. But then the news was that she was going to carry on with her plan anyway. It looks like Boris Johnson's the kind of figure who's spearheading the campaign against that idea. But because of this stalemate and impasse in the cabinet, of course, it does mean not even the UK government know what they want to do. And of course, Theresa May was hoping this would have been dealt with. The cabinet had a absolute majority and a single-minded move and way ahead for this. And then, of course, we've got to start talking to the Europeans about our plan. And Theresa was hoping that this would be done and we'd be having votes in Parliament about this as we go through late spring, and we'll get over those hurdles, and then we can properly start negotiating with Europe with the aim of trying to wrap up some kind of trade agreement, at least in principle, by October. And of course, this has all stumbled at pretty much every hurdle that's been put up. And here we've got Theresa May suggesting that these votes in Parliament, which would have to happen before really we properly start negotiating in earnest with Europe, these votes in Parliament may well now be delayed till August. So, quite a significant, I guess, pushing out of that timeline. And of course, time is not something that we have the luxury of, because still right now at this point, it's the 31st of March 2019, where we're exiting the EU. And of course, that's now, well, just over 10 months away. What do the Europeans think about this? And I have to say, I read this morning, I was pretty much laughing out loud on the tube, people looking at me very strangely. But I read one of the best quotes I've read for quite some time on this topic. And the quote came from Gunther Oettinger, who's the EU's budget commissioner. And his quote was, "Madam May is weak, and Boris Johnson has the same hairdo as Trump. That says everything." And so I thought, well, okay, is that true? And so I've been kind of just looking into this as to whether Boris does have the same haircut as Donald. And this guy's right. So if Theresa doesn't know what she's doing, and the main opposition in the cabinet effectively is Donald Trump's hairdo, then we've definitely got a problem. Now, what's Cable doing about this morning? Well, if we have a look at the chart, because yesterday, and we'll talk Bank of England whilst we're looking at this chart as well, of course. So let's just kind of draw out some of these lines. I mean, the first thing to note, after such a significant week, certainly with the Bank of England event, here we are trading at 135.46. And what were we trading at the start of the week? Well, 135.46. Basically, this market has gone sideways. We're trading the prices we were trading on Friday last week. Yes, plenty of volatility, of course. We've got a range. It's actually not that big a range, considering, but we've got a 150 pip range, which was defined just in yesterday's session. Prior to yesterday, the range was a little tighter, but the point is we are flat on the week for Cable, which is interesting and significant because the 3 weeks prior to this one, if we just zoom in on this weekly chart, the 3 weeks prior to this one were absolute carnage, with substantial downside for sterling, substantial upside for the dollar. Well, right now we have a doji on the week, okay, which just helps to kind of bring to an end that avalanche of downside momentum. So in terms of this Brexit stuff overnight, you're not getting any sterling weakness from this. I don't think anybody's particularly surprised by this story. And so, you know, we're currently neutral. Let's focus in on that price action from yesterday, which was tricky, definitely difficult day, I would say. I mean, we got a steep, well, firstly, hang on, let me get back to the start. Nice push to the upside in early trade ahead of the Bank of England, hit R1, and then, you know, steep downside off the back of that rate announcement. Of course, the Bank of England choosing not to increase interest rates. The vote count was 7-2, so 7 voting for no hike and only 2 voting for a hike. The two hawks. So certainly, you know, probably as expected on that vote count, but if anything, maybe slightly on the dovish side. People were talking about, including me, speculating if they did not raise rates, would they try and use the press conference and the statement to introduce kind of hawkish language and to deliver what we would describe as a hawkish hold. That means not hiking now, but very much looking at potentially hiking rates in the future. And the answer to that is pretty much no. They didn't. I wouldn't call it a hawkish hold. I wouldn't call it a dovish hold either, mind. What they did do was significantly revise down their 2018 GDP forecast, but then left 2019 and 2020 GDP forecasts completely unchanged. They marginally revised down their inflation forecasts also. They chose not to hike rates, and then they pretty much left it at that. And you got a lot of choppiness. There's definitely two sides to the argument here. I mean, I'm very much on the side of the Bank of England should not have hiked, and they did not, and that is the right decision. There's definitely people out there who think that is absolutely the wrong decision. So there's quite a split divide amongst investors and amongst economists here. I think they've done the right thing. But, you know, markets very difficult, apart from that one sharp move at midday. It was very choppy through Carney, and then in the aftermath we then broke to new lows, but then that break didn't last and we reversed. Quite a messy session, and we finished off, and here we are trading back up around, well, we're on the pivot level now, but trading around the levels we were trading yesterday morning at 9 AM. So yes, no hike, not a hawkish hold. That's why sterling has remained down in the 135 area. Now, Sam asked me an interesting question before the briefing, and I'm going to put this question to you. Let me go to a weekly chart. I'm actually going to delete all my technicals, and this is always a good idea, I find. Can get messy, technicals. I like to actually just delete everything and start again quite regularly. So let's just do this whilst I'm here before I ask you this question. We've had this trend line break. This trend line that's been in play, you know, right the way back, you know, 18-month upward trend line that broke last week. We know that. Technically, of course, we got this key double top up at 143.70. We broke through the very important price point of 137, which was the 2017 high. And of course, we're now got a very much bearish technical setup here. People, you know, looking for more downside, but not everyone. And the question Sam asked me was, right, what's going to trade next? Because here we are at 135.42. What will trade next? Will it be 140? I'll draw the line in. Or will it be 130? Which trades first? We're bang in the middle of the two. Which price point do you think will be traded at first? 130 or 140? Or to put the question in another way, the downside of the last 3 weeks, or the last month, let's just call it, which has been very steep, is that now enough? You know, are we back? Have we gone too far to the downside? You know, should we now expect this substantial downside to the momentum to reverse and a rebound back to 140? Or is this just the beginning, or certainly is this not the end yet, and should we expect this very steep downside to continue down to the 130 handle? So be interested in your responses to that. Get them into the chat room, guys, whilst I'm talking. I mean, to answer that question, if you're thinking medium term, obviously we don't forget we've got two currencies here. It's not, you know, yes, we talk about the pound, but it is, of course, the dollar's value that's important as well. There's definitely scenarios that you could argue for both. So how do we get to 130? Well, you get to 130. The downside continues. I mean, technically, of course, we're very bearish here, so that's one thing to say. But I would say, how do you get to 130? You would need a continuation of the deterioration of UK economic data. We've had a bad run in the last month, and if we have another month of bad data, if inflation continues to drop, if economic data continues to deteriorate, then that recession risk, if you like, will pick up and sterling will remain weak. If the Bank of England remain dovish, I mean, obviously they haven't hiked rates, then, you know, if they remain dovish, and August is now the kind of next key important Bank of England meeting. That's the next time they'll have their inflation report, the next time people are looking at for potential move on rates. So if the Bank of England remain dovish in the next month or two, you know, reducing the chances of an August hike, that's going to help. And then, of course, Brexit. As we've seen in the headlines today, Brexit has hit a bit of a, it's kind of stalled here in the UK government, and if we continue to see concern rise that time's running out and we're not making any progress, that can obviously also be a negative. If you also at the same time just get the US kind of staying on the trajectory they are, which is nice solid data. Yeah, I know inflation was slightly lower than expected yesterday, but look, the US economy is remaining pretty solid. The Fed are going to continue to hike rates, and as long as that stays the case, then the dollar will remain solid in amongst a weak pound, and that should get us down to the 130 handle. Now, whilst that sounds all very convincing, I can now give you a very convincing argument for the opposite. How do we get to 140? Well, here you get to 140 by the opposite of everything I've just said. UK data actually starts to rebound. You know, there's a strong argument that says Q1 was so weak because of the weather. Now the weather's improved. Should Q2 economic data see a rebound? And if so, well, shouldn't that lead to the thought process that this sharp downside in the pound of recent weeks isn't quite valid, and better data will see the pound rise, better data will see Carney become more confident, and maybe more hawkish expectations of an August hike will increase. Who knows? We might even get some progress on Brexit, but don't hold your breath. What about the dollar? Well, maybe US data. I mean, inflation was lower than expected yesterday. We're expecting the Fed to hike in June, of course, but what will be their language about a hike in September? Maybe they'll start to downplay it. Remember, if they do want to hike 3 times this year, well, if they hike in June, well, that's 2 hikes done before we're even halfway through the year. So if they want to stick with 3, I would say in the June meeting where they hike, they're going to perhaps have to deliver a slightly more dovish message to reduce expectations of 4 hikes. So that's something to think about that might lead to a bit of dollar weakness. So look, we could go either way. For me, at the moment, I'd expect a continuation of the downside personally. But of course, I'm prepared to change my view should any of those latter outcomes I've just described happen. But, you know, technically, of course, this remains very bearish. Okay, that's enough on the pound. Although, having said that, quite an interesting article, Brexit related, here in the FT this morning. The Leave campaign has been fined by the UK Electoral Commission. This is Nigel Farage's Brexit campaign group. Has been fined £70,000 for not disclosing the amount of money they spent on campaigning, and they actually spent over the 10% more than the cap. And so you could say, well, illegal tactics here from the Leave campaign, and who knows, you could go as far as to say that maybe, well, I don't know, maybe we wouldn't have voted to leave if they'd actually kept within the rules. Although I would say the amount they overspent was £77,380. And in the grand scheme of election campaigning, that is basically absolutely no money whatsoever. So I'm not quite sure how much £77,000 can influence elections. Go and talk to the US about that. They typically spend about $2 billion on their election campaign. So 77,000 isn't a great deal of money. Other headlines. I think this is a story you need to keep your eyes on in the coming weeks. We've got a bit of movement in Italy politically. The election was, well, I can't even remember now, back in, when was it, April, start of April. Hung parliament. We have no government. They've been trying to form one, and it does look like you've got a little bit of progress now with the populist five-star movement teaming up with the extremist League Party, and it looks like you may well get these populist parties forming a government for the first time in Italy for more than 70 years. And so, we've had the likes of Brexit, we've had the likes of Trump, this populist, almost nationalistic political events, and it may well be that Italy deliver the third arrow here, and actually we get a populist government in place, and then that'll get interesting as we go through the summer. So keep your eyes on this. This may become more of a risk that might undermine sentiment, particularly in Europe. I think, what's the time, 8:53. I'm going to quickly just review the US inflation data. Here was the chart. So I said inflation was lower than expected. This is annualized core inflation in the US. We were expecting 2.2%, and it came in at 2.1. So whilst it was lower than expected, of course this chart tells a very interesting story, which is where we had 1.7 or 1.8% inflation for a full 12 months, and suddenly we've ramped higher. And that ramp higher has not dropped again. We've maintained 2.1%. If you're thinking about, are the Fed going to hike in June, then the answer is yes, they are. Currently, there's absolutely no excuse not to. So whilst the dollar did take a bit of a breather on its rally, yesterday it took a bit of a breather on that. The dollar index pulled back a little bit. The dollar is absolutely still right up at the top end of its move that we've seen in recent months. Okay, let's check the data calendar to wrap up the briefing. This is what's on the slate for today. And I mean, yesterday was definitely the big day for scheduled events with the Bank of England and US inflation. So today's definitely quieter. Not really anything of note as we go through the morning. And in the afternoon, the most interesting data will come at 3 o'clock from the US with the University of Michigan consumer sentiment. This is the mid-month preliminary data. This is the more important one. We get a second University of Michigan sentiment number at the end of each month. That's the final reading, which tends to be less market sensitive. So today's the important sentiment reading, and we're expecting a number at 98.5, which is a slight drop from last month's 98.8. So that's the most significant data point of the day at 3 p.m. Outside of that, Bullard's talking from the Fed. He's usually on the dovish end of the spectrum. So we'll see what he's got to say. He's giving a presentation on monetary policy, so the topic for discussion certainly gives him room to make comments about his views on the current situation. Draghi's talking at 2:15. This is the 8th edition of the State of the Union, like American-style State of the Union address. He's talking in Florence, and I'd say that's definitely the most important monetary policy event of the day. So we'll be listening into Mario Draghi at 2:15 just before the US Open. Okay, so that's the important things to look out for today's session. That is it. Final day of the week. Good luck out there and enjoy the weekend. Thanks very much.